Welcome to an accounting video brought to you by Simplifying School. In this video we will look at bank reconciliation and the steps for bank reconciliation. But first, why is bank reconciliation important? Bank reconciliation is the process we use to compare what we have in our books with what the bank has about our bank accounts in their books, and we see if the two agree. This can help us find mistakes, help us see if there is omissions on any of the sides, and also help us sometimes to find theft. Let's look at the steps for bank reconciliation. Now, the steps that I say you can do in any order. I just do this in this order as I find it sometimes easier to start with the bank statement and then work from there. So I would first check the bank statement and make sure everything that shows as an income on the bank statement is reflecting in my books as well. Because there can be deposits into your bank account that you might be unaware of, maybe something like rent income or maybe something like interest income, anything that could be deposited into your bank account that you might not be aware of. So we need to check and see if it's also in our books, and we have to also check that the amounts are correct, and then we have to make the necessary adjustments and entries in our books. So if there is something that wasn't in our books that should be in our books, we need to write it in our books. And then if there is a difference and the problem is in our books, we need to make the adjustment in our books. If there is a problem and the problem is on the bank side, we need to make that entry on the bank reconciliation statement, and we need to then also address the bank regarding the problem. Check the bank statement for expenses and make sure that all the expenses that's shown on the bank statement is also reflected in our books. And we have to once again check the amounts. We have to check this because there could be like a debit order that went off that we don't have as a normal transaction in our books, or some bank costs maybe. There could also be, sometimes when there's theft, a withdrawal that was made from our bank account, or maybe a transfer that was made from a bank account that isn't put on the books because it was a fraudulent transaction. So that would help us to find fraudulent transactions, especially in big companies where there are many people working in the finance department and more than one person can actually transfer funds. This is a crucial step. We often hear about people that made deposits into their account and said it was for someone else or something like that. So we need to also check this. If there are entries that should be in our books that's not in our books, we need to make the entries in our books. And if there is a difference in the amounts and the correct amount is on the bank statement but we have it wrong in our books, we need to make the adjustment in our books. If there is a problem with an amount, an incorrect amount on the bank statement, we need to put it on the bank reconciliation statement and also address the bank about it. Then, after that, we could move over to our books, and we need to check that all the income or expenses in our books also reflect on the bank statement. Now, sometimes there is a date problem, so sometimes a deposit would take a couple of days to clear, sometimes a payment would take a couple of days to clear. So there could be time differences that causes something not to show up on your bank statement, and these things would be written on the bank reconciliation statement so that you can check it next month to see if it actually went through or not. Then we must also check the previous bank reconciliation statement for any entries that are still outstanding. Remember, we just said that we need to write something that's outstanding, we need to write in the bank reconciliation statement. Now sometimes there was something from the previous month that didn't show up in the previous bank statement, so they would be on our previous bank reconciliation statement, and we can use that to check did it come through this month or not. Sometimes they would also give you an additional information, something that tells you, for example, a stale check or that a donation has been cancelled. These things should no longer appear on the bank reconciliation statement because the adjustments should be made in our books. Then the last step, now that we've made all the adjustments in our books that were supposed to be made, and we've made all the entries that we were supposed to make, we can now get our new bank balance as per our books, and that amount is also going to be used on our bank reconciliation statement. You will see in your bank reconciliation statement, I'm not going to put it up here because different places, different schools, different teachers sometimes use a slightly different format, and I don't want to confuse you guys, but you can actually see, if you look on your skeleton, on your framework, whatever you want to call it, the thing that you usually just put the numbers and the amounts in, would say somewhere, the standard one, the standard example would say somewhere that the bank balance as per your books, and then they'd also give a bank balance as per the bank statement. So the one that says as per your books, you are going to put in the amount, the new bank balance that you've calculated after your adjustments and your entries. The most important thing to remember is that the differences where entries on the bank statement appear are correct, but it doesn't appear in our books, we should make the adjustments and the entries in our books. If something is outstanding or incorrect on the bank statement, those entries should appear on the bank reconciliation statement. If this made bank reconciliation a little bit more understandable or a little bit more easy for you, why not share this video with your class and subscribe to this channel for more videos covering topics you are studying.